Alright, welcome to this video, and I'm going to just do a market update here, just talk about what's going on. I think I got a pretty clear picture here of what's happening. I think the market's done correcting. And, you know, it's tough with the Fed in here because we've got the quantitative easing going on, and we know we're at 85 billion or up to 100 billion a month. It's ridiculous the amount that's being poured in right now. But it's hard to judge what's exactly happening in terms of the markets, because at some point QE is probably going to fail. But right now it's hard to judge when that's going to happen. And we know that the country right now is probably headed into recession. When we look at a lot of the commodities, when we look around the world, we look at the GDPs around the world, they're shrinking, manufacturing shrinking. Even in China had some terrible numbers. But somehow we end up rallying because of the Fed, and people are looking at some optimistic data that's coming in, particularly with housing starts. So, you know, it's a bizarre situation. So we just have had some really rough waters here lately going on with this, and it seems like every time I'm cleaning up one thing, something new happened. Well, I'll tell you one thing today. What happened today was basically unavoidable, and it basically confirmed that we are most likely headed much higher from here. So the Bradley, we know that the Bradley is going to top into May. Okay, Bradley tops in May, and I think there's a good chance now this market just keeps running up through May. It's already March 1st, basically. It's the end of February. And so today, this market tagged our upper stops here. Very, very similar to what it did back on December 31st. Here's what I think happened. When we had, I said in this latest version, the last short would have actually come here at 1507. And it's kind of, I've never felt like I've been making so much progress and walking backwards at the same time. And that's just, it's been kind of frustrating. But this new version, so basically we would have been short this whole time into here and then just gone long today. This was definitely a buy signal. There's no doubt about this. The 1518.75. It may have seemed high at that point, but that's the kind of like the point of no return. It's going to go higher from there. But this 1507, I think, in all essence here, that this was basically the top. And I think what's happening is, I want to kind of highlight what a corrective series looks like typically. When we have a corrective series, if I do this like in terms of let's say like a wave pattern, and I'm just going to tell you my best guess in terms of what's happening here with this situation, okay? Because we have a very non-normal situation. We've had it for a while with the Federal Reserve, but I think what happens if you had a normal situation, the market's gonna do this. It's gonna correct. It's gonna have some kind of a bounce. And then it's going to maybe have what we would call, if you're talking about like a straight wave pattern, you're gonna get like a very strong C wave type of a correction down into here. So I was thinking, if we had a big correction, that's what it would look like. But when you have stimulus, these patterns are unfolding, but they're basically truncating. So patterns are going to be truncating. Okay, because of stimulus. Now I knew that we were due stimulus. I knew that we were due for some type of a potential, we were in some type of a potential crash cycle into there. I mean, I knew that. I talked about that. We had the retrograde date. But that's we're basically out of the orb of that now. I knew that this period into here was some type of a potential crash period into there. Okay, so let me tell you what I think's happening here. I think that in the context of what's going on here, and I'm going to use the word context here. Okay, in the context of QE, okay, context of QE, this was a little mini crash. The market really doesn't like to crash with QE. That's pretty big move down for quantitative easing. Now I thought it might go down and fill this gap. I kept putting that order in down here. I was looking at the 1427. That's completely a reasonable target in a normal market situation. You know, it comes down. Maybe there was some support here to test. I talked about the 1440, and then I talked about the 1427 as, you know, okay, it's going to fill the gap. I said, okay, at the very least, that would fill it, even with quantitative easing. But it turns out that this is just so powerful what the Fed is doing that I think that's the end of the correction. I think it's over. And so I said, instead of, we actually ended up having a running correction, which basically, what a running correction is that it's actually correcting higher, and that basically was the crash. That was it. I think it's over, and that was it. And it kind of stopped. It stopped right there. I mean, instead of, you know, and so I mean, you could have a five wave pattern now. I mean, depending on what's going on. I mean, you could have a triangle of some kind. You know, you could have 5 waves. Let's just say it looked like this. I don't know. Let's just say you had some kind of some kind of a triangle. Let's say with an extended overlapping, some kind of an overlapping, highly overlapping sequence into there. It's just some kind of a corrective pattern. That's 5 waves. That's just more corrective, let's just say, something like that. Like that could be like a corrective type of a pattern. Let's just say 5 waves triangle, where we would have one of the legs would have to be longer. So if it's an expanding triangle, let's just say, you know, something like that. Whatever. Point is, this was the correction. This was it. I think this was it. This is my best hypothesis in terms of what's going on. I think it explains things. I mean, we know that, you know, the Bradley's going up. The Bradley's going up, and I think that's it. I think it's done. I think that was our crash. Okay, in the context of QE, and I just think that these patterns that are supposed to go and unfold and correct, they just don't correct. They start going down, and that's done. That's it. And we're on to the next leg up here. And so, according to these stops, I mean, that was a valid signal. No matter what version I'm looking at of my signal today, that was it. That's the end of the line. That's the line in the sand. Okay. Line in the sand. The bulls are in charge. Okay. So line in the sand. Okay. The bulls are in charge. And it kind of baffles, I think, some people. They don't want to make excuses. They don't want to say, oh, well, you know, I don't want to make excuses because the market's always right. You know, you ever heard that one? Market is always right. You ever heard that? And from a trading standpoint, of course that's right. I mean, we're trading, we're trying to make money, we're trying to make profit. Of course, we're trying to get it right. But from the standpoint of like a corrective pattern, I mean, it's not always right. They're in here pumping this thing, man. The guy came in today, he came in with almost $6 billion. $6 billion in a day, in half an hour. $6 billion with a B, 10 to the 9. 10 to the 9 power, 10 to the 9, that's a billion. Okay? A trillion is 10 to the 12. A million is 10 to the 6. 1,000 is 10 to the 3. Okay? 6 billion in one shot this morning. So he definitely spiked that punch, and then he went in front of the Congress and he's like, "Oh, I'm not going to stop because unemployment's not going down." And it's just like, so you get a positive feedback loop. Okay? Positive feedback, which means that, you know, the more that he pumps with the QE, the more that he talks, you know, they get the lower rates, okay? And then the funds can basically borrow at a lower rate. They can keep pumping money. We're getting this inflation here. You get this positive feedback loop. So it's not just the fact, and you also get the dollar drops. I mean, you got this whole thing going on here, right? It's not going to end. He's not going to stop. Okay? We know, look, Bernanke. Okay? What is he? He's Jupiter. He's a Sagittarius. What does Jupiter do? It expands. Jupiter is big money. It's printing money. He is Jupiter. That's what he is. He's going to keep his foot on the pedal. He's going to do the QE. As a trader, I have difficulty trying to figure out how far could this thing correct? How far could it correct? Well, not very much. He's not able to do it. Yes, is there some point where he's going to have to pay the piper? Of course. He's got a balance sheet of about $2 trillion, and at some point, okay, interest rates are going to go up, and he's going to have to sell those treasuries. But for now, we just saw. If I'm right here, I mean, I could be wrong. I'm just telling you my best hypothesis. I think we just saw a bottom. I think that's it. This is done. We're going higher. I think we're going higher at least till May. Okay, at least could go more. I just don't see anything to stop it, and the more that he sees evidence that it's working, he's going to keep his foot on the pedal. Okay, foot on the pedal, foot on the pedal. He's not going to stop. And I think this is all a bait and switch. I think what you see when they say, "Oh, members were dissenting against Bernanke," and they're talking about possibly ending QE, which is what you saw in here. That's all just the bait and switch. They're gonna good cop bad cop. Oh, you guys say that that QE is not good, and then Bernanke gets in front of Congress and testifies. He's like, "I'm not gonna stop." Well, guess what? He's not gonna stop. So that's kind of I think that's what's happening. I really do. I just think that it's frustrating to try to forecast this stuff, because there's so much pump in there that what's gonna what are you gonna do? I mean I can tell you I think that's reasonable. Of course, it's gonna fill the gap. That's reasonable. Okay, reasonable. That's why guys have you guys to put your stops in there. But guess what? It's done. That's it. That's it. I hate to stop. We're going higher. That's it. So I think that's what's happening. So try to understand in the context of forecasting, it's not that every forecaster in the world has just lost their forecasting sharpness and ability, and it's just that you're getting these truncated patterns that aren't real, like in terms of like counts, and the market's just going higher, and so you can't account for this. This is why I get really wary about doing longer term wave counts in this quantitative easing environment, because I just don't think it works. I think that the market is not always right in terms of the patterns, and in terms of trying to forecast that you've got a huge force in here. You've got Jupiter, you've got Bernanke in there, and he's not going to stop. So that's what I think's happening. We're long now on this. Hopefully the worst of this whipsaw is over, and I think now we're just going to be heading much higher. And how much higher? Who knows? It depends. If the mutual funds want to jump in now, that's fine. But the point is that I've written this whole system now so that we can take advantage of these. And I know we've been whipped around quite a bit in the last week or so, and today's no exception. But there are a lot of positives here. The system's getting better, and I think it's going to just keep going higher from here. All right, that's all I got for you tonight. Thanks for watching, and I'll talk to you soon.